if we do see an increase in the number of inflows going to exchanges again, that could signal a potential strong upwards movement.
I think most likely is we see a recovery where kind of valuations move back up to the, 10K range.
Today's crypto market discussion is sponsored by OKX. OKX, one of the leading crypto exchanges, has developed its own blockchain platform, OKChain, and recently has launched a testnet. OKChain allows users to issue their own cryptocurrencies, create trading pairs, and trade freely on it. Watch this video and go check out OKChain. The link is in the description below. What's up, YouTube? My name is Jackson. Today, I'm joined by Simon Peters from eToro and David Grider from Fundstrat. How's it going today, guys?
Yeah, good, thanks. Everything's good.
Great. So Bitcoin has seen some incredible volatility in the past week. What are your targets for Bitcoin's next move?
Right. If I look out over the next 6 months to 12 months, I do see a number of scenarios, and I can walk through kind of some of the data behind how we get to them. That range between kind of a bear market, to around 2,000 if with a low probability, a stagnant market, maybe where you could see some range where we sit kind of where we are with, a minimal probability from my perspective around, maybe 10, 15%. I think most likely is we see a recovery where kind of valuations move back up to the, 10K range with, multiple expansion on kind of some of the valuation models I look at, which I put about 50% probability. And then, there is some chance, that you have a bull market in the 20% range in my view, and then maybe a 5% probability you see another bull market similar to the one that we've seen in 2017 at like maybe a 5% probability. So I kind of handicap it in that type of way.
On March 16th, the Fed cut interest rates to nearly 0% in the face of coronavirus fears and stock market crashes. The European Central Bank's primary interest rate is already at 0%, and the Bank of England recently cut their interest rate by half a point to 0.25%. President Donald Trump has also introduced a $1 trillion stimulus plan to bolster the American economy.
Americans need cash now, and the president wants to get cash now. And I mean now, in the next 2 weeks.
While inflation continues to be the main tool used to combat the financial crisis, what role will Bitcoin play as the situation worsens? Simon, let's start with you.
Yeah, I think at the moment, given what we have seen in the markets, what central banks and governments around the world have been doing is just trying to stop the bleeding. Essentially, we've seen this conversion of assets into cash, regardless of which market it is. But there will come a point where, due to this increasing amount that's been pumped into the system, that cash is going to lose its value, and then as the virus no doubt stems down and the number of new cases that are being reported tails off, the question to investors is then, what do I do with all this cash that I have? And then they may look into other assets that can hedge against that, essentially, with crypto possibly being one of them. I mean, if we go back to the whole idea of where Bitcoin was born from, it was out of the financial crisis and the distrust for banks as such, and to provide an alternative system for people to transact with each other without the need for a central party. So if we go back to those roots, and I think the further we go down the line, and the more people understand what's actually happening with their money going forward, then that may drive the push into crypto, certainly.
What are your feelings on this, David?
Well, it's a really good question. I think that in the broadest sense, if you look at central bank easing and liquidity, intuitively it should be inflationary for a number of assets, right? If you think about, you're printing more dollars in the system, but you have to, think about it more nuanced than that, which is that the reason that central banks are pumping excess liquidity into these systems is because you have to offset when you have dollars in the economy, and then you have financial assets and you have asset values, and asset values fall, debt falls. You're reducing the monetary supply in the economy, right? So if you're reducing that and you're offsetting it by increased central bank money, you get to somewhat of an equilibrium. And I think that I'm not of the view that the dollar is in the position that it's going to weaken and Bitcoin is going to be strengthened because of money printing, right? The U.S. is still the reserve currency. It is still the place that globally a lot of capital flight in times of uncertainty is flowing to, and you can see that now. Treasuries have returned positively in the year, and the dollar has returned positively in the year as the only two major asset classes, and everything else. At the same time, you could see strength from Bitcoin and crypto, not necessarily from what the Fed's doing. Maybe part of it spills over, but I think you could see a lot of that from emerging market economies, other nations where you have, capital flight that needs to exit the country. I've seen a strong correlation between the Chinese capital account during times of their devaluation, to Bitcoin's price. And, I think that liquidity can make it in to the markets. And you could also see a scenario where the dollar strengthens as well because of all the global uncertainty. So, I do think on net, it's very positive for crypto in general.
Mm-hmm. And how do you guys feel that the volatility of crypto is going to play into this whole idea of at some point Bitcoin or crypto becoming hedges against the monetary system?
Well, the volatility aspect, I suppose, takes away the idea of crypto being a safe haven. Generally, safe havens are there to provide stability. What I would say is, if we do see overall market liquidity improve and this volatility go down, then the case for it to be a safe haven could greatly increase.
How do you think the current economic crisis will affect the Bitcoin halving? What effect will the decreasing inflation rate, which is fundamental to Bitcoin, have on Bitcoin's long-term success? Simon, would you like to start?
Well, the crisis is not going to affect the halving because the halving is going to happen regardless. It's programmed in. So we will see that happen. In terms of long-term effects post-halving, look, we know there's going to be a decrease in the block reward, which theoretically should decrease selling pressure from miners. That's one aspect, and that could provide room for upward price increases. But there's a lot more happening in the world of crypto at the moment, not even considering this virus, to where we were 4 years ago from the last halving. So there's a lot more at play here, and a lot more factors that could suppress the price. There's futures markets, there's options markets now. Bitcoin. Some do argue that the whole purpose of this was to suppress the spot price of Bitcoin. That's an ongoing debate, but we're at a very different stage in the compared to where we were 4 years ago with the last one. There's also selling pressure from other means. This plus token pyramid scheme that's ongoing at the moment, where they're unloading significant quantities of Bitcoin and Ethereum onto the market. So at any point in time, we could just have significant sell orders placed to suppress price. But I think in the longer term, my longer term outlook is one of positive, bullish longer term, and based on what we have seen historically, post halving, a year, 18 months, 24 months has tended to result in the top of the next bull market.
So you feel that the coronavirus and the economic crisis isn't really going to impact that long-term bullish view?
In the long term, I don't think so. No, because there will be a point where we get to an end of this virus. Like, as I mentioned, the number of new cases already in China has actually started to decrease, and we haven't seen as many new cases develop there. So once the Western world follows, or the world as a whole follows, and we start to see these cases tail off, things should go back to normal. And with the halving, decreases in selling pressure, and with this excess cash that's in the system right now, that may provide the right conditions for people to now consider crypto as an alternative asset and a means to protect themselves against any future inflation.
Yeah, so I'll just tack on one quick thing to the last thing I was talking about that Simon reminded me of when he talked about the economics of the economy and the GDP slowdown and the fundamental flow over to why stocks and bonds should see weakness makes sense. Right. But the economic fundamentals of, Bitcoin and another monetary commodity proof of work cryptocurrencies, and then most of the digital economy of crypto assets, right, like doesn't follow the same, economic fundamentals, meaning, right, like it's not about necessarily economic activity, GDP growth and earnings for the most part. The halvening has been shown in our view, right, at Fundstrat. Tom's view is that the halvening is bullish for Bitcoin. right? Like that's the punchline. But how do you get there, right? Like Tom's done a lot of good work on what the net reduction in supply is on the market from miner selling, right? And as a supply demand asset, that is positive if you look at what that means for new supply coming onto the market, right? And I think from a demand side, on narrative economics, Robert Schiller has a very good book, Narrative Economics, and it talks about how stories drive investment themes in the ways that market behave. And I buy into that, and I believe that because there has been such success with prior halvenings, that you will likely get some cohort of investors who say, look at that, and then they say, okay, let's see if history plays out again. And right, history doesn't repeat, but it rhymes. And I think that's very likely too. From another fundamental perspective, it's like as well, like it's not also just the number of new supply in the market, right, that determines the price. It's also existing holders who have the ability to sell. And again, we mentioned most of those are underwater. So, as you have, a reduction in the current new supply, right, at current market prices coming onto the market, because that's the cost that it costs to mine it at, marginal cost, marginal revenue to miners, right? And then you have a new demand from a narrative, and then you have reduction in demand, right, that's not going to come on the market from the existing supply, less likely because they're underwater, right, until it reaches again above peak levels. I think that's a strong combination for prices to move higher. And that's kind of the framework under which, I'm looking at the halving and we're looking at the halving and thinking about what that could mean for prices going forward.
So in a recent report, blockchain and crypto analytics firm Chainalysis found that large increases of Bitcoin inflows on exchanges are a good indicator of volatility. Transfers of 10 to 100 and 100 to 1,000 Bitcoin were in total responsible for around 70% of all Bitcoin sent and received by exchanges in recent days. This suggests that professional investors and traders were driving the market, even though they were joined in selling and buying by a large number of retail holders. How can this information help us anticipate future price action?
We have vision of inflows and outflows anyway. So I think if we do see an increase in the number of inflows going to exchanges again, that could signal a potential strong upwards movement. So I think the community is always looking to see what the inflows and outflows are and to ascertain the movements that could happen, if that makes sense. So going forward, that'll be key metrics to have a look at.
When I look at that and I think about kind of what the market dynamic is that's driving the price right now, I'm going to add another data point, which is that the majority of those inflows that have been moving into exchanges now have been really largely coins that have been recently moved. Newer coins, newer holders, not long-term holders. And if you take it from the perspective that you have both newer holders, over the last year, let's just say, as opposed to 5 years, which is post the bubble we've seen and kind of the onboarding of a larger, broader institutional class. If I think about that investor demographic, right, and what their incentives are driving this market, we've seen contagion, generally speaking, from all financial markets across the globe to all financial assets. And, I think it's probably very likely that the subset of the market that's been possibly responsible for those inflows has been a traditional investment class broadly exposed to the market that maybe needs to, de-lever, and that is part of the selling pressure, right? As opposed to early holders getting scared out. Now, what is the impact for retail, right? The impact for retail is, if you ever have a market move like this, you get liquidity issues and you get structural deleveraging, meaning like when there's large flows and large gaps down because of, some selling pressure and people aren't willing to buy just because of general broad panic across all asset classes, then you get deleveraging like you've seen on BitMEX. You've seen the open interest fall from, 6 billion, 7 billion down to where we are around 2-3. You see deleveraging from a number of, platforms where people can trade with leverage, not just with futures. And then you see deleveraging from a lot of the borrowing and lending markets. And that has that cascading effect, right? So I think that's kind of, in combination holistically what I'm seeing when I think about, how the market's been moving and been driving from those types of inflows into the exchanges.
So you feel that most of the professional traders and investors have already gotten out of crypto, and that's what we've seen in the past 10 days or so?
Well, it depends how you define professional, right? I think generally speaking, there can be an early class probably of what, you would call crypto native, like crypto whales, right? To use the term, right? And I think that to a large degree, they probably still dominate the majority of what's considered the float, meaning the float being the supply actively traded and available, on exchanges that people can buy and sell, right? Because the marginal liquidity in any market, right, isn't the volume you see, right? Like if you look at the total supply on coin aging data, you can see you get somewhere between maybe 1% to a few percent of the total supply that's ever traded, right? And that's what really moves the price, right? And then that supply can be turned over a bunch of times, and then that's the volume, right? So what is that supply base? Who holds that in aggregate, right? And I think that probably, you've seen an onboarding in 2016, 2017 of a traditional, probably institutional, maybe a fund class to some degree, but not very large, right? But, still prior to that, this was a very small market. And I think that it's still probably, mostly dominated by early, larger, crypto whales, right? And then if you think about, what's happened in the last downturn, right? I think it's possible that a lot of these traditional folks who have been, what you'd call traditional institutional investors have been maybe flushed out, kind of like the retail audience was in December of 18, but not necessarily due to Bitcoin's reasons, but due to some structural reasons across the broader market, right? Like if you're a fund manager and you're holding, let's just say you have your stock allocation, you have your bonds, you're getting margin called on a number of leverage positions across your portfolio, right? Depending on your strategy, right? Like you need a rush for cash, not just for the sake of individually investing in this asset class, Bitcoin, right?
And what kind of circumstances would have to be in place for professional traders and investors to lose their ability to drive the market?
I don't think they'll lose their ability to move the market. I think that's always going to be there for them. What I would say is that at this moment in time, the market, the crypto market, that is to a degree quite illiquid, and the total liquidity of the crypto market is spread across various exchanges. It's fragmented at the moment. So it does mean that with a large market order, the market can spike significantly one way or the other, depending on which way you want to move it, pretty much. So once exchanges perhaps come together and this liquidity deepens, then it may be that large orders like this that we have been seeing may not have such an impact on price action going forward. So to sort of answer your question, as the liquidity improves and more people do get involved in the ecosystem, it could well be that the market orders that we have seen may not have such an influence on the market anymore.
Mm-hmm. What are your thoughts on this, David?
I think when you talk about who drives the market at any given time, it's a dynamic question, right? Because again, price is always set by the marginal line of liquidity, right? And as Simon rightfully mentioned, liquidity in Bitcoin and crypto is probably less than most people think, just given some of the the reported volumes. When you think on a fundamental basis, right? Like on that turnover, right? So who really drives the market at any given time can be a mix of factors, right? And people can buy and sell for many reasons. So I think that it's not necessarily phrasing it the right way. But when I think about what drives the market, right, I think what drives the market in aggregate is probably a number of factors. I think structural reasons drive the market right now. I think that it's the supply demand dynamics we've seen from deleveraging, right, which force shorts. I think that's one thing that squeezes a lot of people out and forces a lot of pressure. I think when you get a lot of underwater holders that are restricted from supply side that don't sell because they're underwater, which is 50% of the supply, as I saw in some other data, you get a lot of lax in selling, and then that can create some scenarios where you don't need a ton of marginal demand to drive the market, right? And then if you get some catalysts in place, and we see a number from our point of view, which one could be the halvening. I can talk about it in a second because I know that's probably some touched on. Another one could be some geopolitical risks that we see more broadly on the horizon, and we think that still plays a role. Another would be central bank liquidity globally being added into the system. And then, I think, another kind of thing that could take off some stress on the market could be the elections as well. This is some very thoughtful views from Tom Lee, and in that the White House will be less focused on crypto regulation, perhaps if we're lucky. So I think that's kind of when you think about what drives the market, it's a bigger picture than kind of just whether it's retail or professional. In that way, I think is the way I view it.
One suggestion you would like to make for our viewers, for anyone who's looking to survive or take advantage of this financial crisis that we're currently in, what is one thing that you would suggest to them?
From my perspective on the crypto side, on the investment side, I think prices right now for Bitcoin, particular, and crypto in general, are at cheap. When I look at fundamental valuation levels based on some models that I have, are at cheap prices that we haven't seen since, December of 2018, and then we haven't seen these prices again since December of 2016, right? So from that perspective, if you have a long-term view, 6 to 12 months, I'm bullish there as well, right? So I think that's kind of a framework that I would use for thinking about it.
Mm-hmm. Simon, do you have a suggestion you would like to give our viewers?
Yeah, just echoing what David said. I think in terms of my own conversations with clients here at eToro, the first thing I ask them is, what's your personal objective, and are you because that will dictate what your strategy is, and ultimately what assets you should be investing into. And if you have a short-term outlook, then perhaps riskier assets like equities, arguably crypto, are perhaps not the things you should be looking to get into right now. You've got to think more about capital preservation and a little return rather than higher risk. But if you have a longer-term outlook, then you can afford these swings in the market. And we have seen over time, if you look at stock markets over history, in the financial crisis or the dot-com bubble, if you had bought at the top of those, then, or maybe not so much given a couple of weeks, but before that, we're still higher than where we were then. So if your outlook's long enough, then you can afford to take greater and greater risk.
Great. Thank you guys for coming on the show. It was amazing to talk to you.
Thanks a lot.
Excellent. Thanks for having us.
That was Simon from eToro and David from Fundstrat. If you enjoyed the video, hit the like button and subscribe to our channel. And guys, always remember to hodl.
CoinTelegraph. Like, subscribe, and hodl.